Hello, everybody. Welcome to another episode of Deal or Bust, where SaaS founders come to sell their companies live. It's a ton of fun. And to make sure you don't miss future episodes, make sure you visit nathanlatka.com/invite. And if we haven't met yet, it's nice to meet you. Again, we are live. You can see here on my phone, it's 11:02 Pacific Standard Time here, August 27th, and we have a great show for you guys today. So if you're tuning in, say hello in the comments. Let me know you're here. I see Paulo is there. Stefan is saying, let's go. Christopher going, woo, that's great. Aaron saying the man, the myth, the legend. I don't know about that, Aaron. You're giving me a little too much credit, but I want you guys to know that this is a super interactive. It's like Shark Tank, but for software. And we love when you guys are commenting. When you comment, it means you're engaged and everyone learns more that way. So go ahead and say hello in the comments if you can hear us clearly and see us. And additionally, the show is doing so well on YouTube. LinkedIn said, please bring it to LinkedIn. So we should now also be streaming live into LinkedIn. And those of you watching on LinkedIn can also comment. Joe turning in via mobile. Joe Anderson, good to see you. Romaine Bellion, this is great. So guys, the way this show is going to work is, again, it's deal or bust. We're going to meet a founder. He's going to walk through his P&L. We're going to understand the business. And after we do that, we will meet buyers and experts who will talk about the valuation of the company with the goal of trying to get a deal done at the end. Maybe the buyers don't make an offer because they're not interested. Maybe they make an offer and it's too low and the founder refuses. We'll see. But we're about 60 seconds away from meeting the founder. Now, those of you that are just watching now for the first time, here's what you saw last week. You saw podcast host Jeff up there on the upper right. Okay, he got a $2 million offer to sell his company, his podcast live, actually from one of our buyers on today, Tim. Now, ultimately, he declined, and frankly, it might have been a good thing because as we learned, podcasting is so dependent on the host, it can be a risk. But he was doing 1.2 million in revenue, turned down a $2 million acquisition offer for 100%. And if you love this sort of stuff, you want to make sure you don't miss next week's episode, where we're going to be talking about a very hot sort of business, subscription boxes. I mean, this is like if SaaS had a physical version, it'd be subscription boxes. Think Dollar Shave Club. So we have one of the top performing boxes from Cratejoy, which is where all these boxes list themselves, coming on. They did $500,000 last year in revenue. They'll come on and try and do a deal live. Make sure you add that to your calendar right now. Don't wait because you'll forget. Go to nathanlatka.com/invite. We'll put that link right now in the chat so you guys can go check that out. Again, I want to say hello to everyone. The nice thing about this is we are live. So when you do comment, like Lee, I can bring him on live. Lee, he said, hey all, let the games begin. Lee, good to see you. Who else? Craig said, hello, everyone from Serbia, from Stefan. Paula said, good alert. Love that. Can't wait to check it out. So guys, again, great show today. I want us to jump right in now and understand and meet the founder. Before we do that, again, if you haven't watched before, this is how the show works. We brought in experts like David Hauser, who was a co-founder of Grasshopper, built it $30 million in terms of revenue, and then ultimately sold it before founding Chargeify. Now as an author and also building Superfat. He'll come on and give expert advice mid-show, along with Jaco, with winning by design, sales extraordinaire, and also Mark, first time on the show. We're gonna love Mark. I think he's the founder of BetaList and also Open Margin, and was at PRCo prior to that. Now our buyers today are exciting. Akil Jabber with Horizon Capital, looking for, again, B2B, e-commerce, these sorts of deals, 100K to 2 million sort of deal size of these 5 companies acquired. We've got Ben Fall, who has just an amazing background, founder of Best Reviews, which he sold to Tribune for 110 million bucks, is ex-West Point, ex-Harvard, and ex-LinkedIn. I guess you're never ex-Harvard. He is Harvard and is ex-LinkedIn, focused on e-commerce and tech. And also Tim Schumacher, who founded AdBlock Plus and sold it before jumping into SaaS Group, where he buys companies, operates, and runs them. So we've got a great show today. The only question left is, are you guys ready to meet the buyer or what? Hit the thumbs up. You guys ready to meet the buyer or what? We're 30 seconds in. Martin saying, Cratejoy. Martin, awesome info as usual. Stefan, good to see you. Here we go. All right, so let's meet the buyer. Let's bring him on. Mr. Ed Adorno, welcome to Deal or Bust. How are you?
Good, you? How you doing, Nathan?
I am doing well. So quick background on how we met. We met actually via our good friend Andrew at michaelacquire.com. This is where companies go and list themselves to try and sell quickly without big broker fees. So Ed, what were you thinking? You know, you listed on MicroAcquire, so you have sort of an intent to sell. Tell us what the business is. I'm going to move forward to the side. The business is prentsum.com. What do you guys do?
Look, pretty simple. We're an online apparel printing company. We have no machines. It's fully online. We develop a lot of tech and a lot of process optimization to be able to produce t-shirts, hoodies, caps, bags, all sorts of apparel through a large supply chain network of printers and garment distributors. We have several models, B2B, which is mainly working with bulk printing. Think big events, sports teams, big size companies. And then a couple of years ago, we launched our B2B2C model, which is a print on demand model. Now, this one is more directed to online sellers. People are selling merch online. And we operate both in UK and Spain for our B2B models. And for our B2B2C, it's worldwide.
And so one of the reasons I'm excited to bring you on, because again, we're mainly focused on B2B SaaS, is I had a company called Printful on my podcast, and they said something very interesting. They basically did what you did, but they had no sort of B2B SaaS model. And they realized using their customer list and their historical merch sales, these businesses running influence campaigns on Instagram that also had merch sales, they were selling a subscription tool, a true piece of software to those Instagram influencers to manage their merchandise sales, almost like Shopify, but not Shopify because it's all happening via sort of the social networks. So the interesting play, I think, here is one, understanding your historical metrics, and then two, for the buyers and the experts going, is there a big B2B SaaS play here that you haven't yet capitalized on? What are your thoughts on that? Have you tested a B2B SaaS model? Do you sell any software at all today?
Our goal with our POD model, or B2B2C, was to put it into a SaaS where you would charge a subscription for people to use the software in itself and then get the service of getting print on demand. Now, we thought we could do that later on when we had a lot more volume. So for now, in fact, we started like that. We started with a subscription base and so on, and we removed it completely, did it for free. We get margins on what we print. So we're like, hey, let's run it like this. And then later on, we'll add a SaaS component to it. So that was definitely the end goal of that particular model.
So talk through these three revenue streams today: commercial printing, apparel, and on-demand printing.
Right. So we started with the commercial printing side because it tended itself to be a less risky model for these higher revenues, more stable. We started in the UK, despite of having operations in Spain. I knew a little bit about that industry, so we went with it. And again, we work with big size companies. Think Ryanair, Virgin Atlantic. Oh, nice, you got it there. ITV.
I'm on it, baby. I'm on it, man. My goal is for you to get a great deal done. I'm on it. Yeah, big customers here.
You don't have one there that we printed for LA Galaxy when they came over to the UK to the full camp. That was a very nice big order for a US company coming into UK. So that was like call it a cash cow model. That's what we wanted to do with that side. And once we got that to a solid position, that's when we were like, okay, where are we going to innovate next within the industry? And that's when we jumped into the print on demand side. Obviously, print on demand is definitely a lot more technology involved in terms of development. And it's a new model. We had a bit of an advantage because we knew the industry, we had the supply chain, we had certain customers that were in line with this model. But again, it's just like a new business anyways. So we started developing end of 2017. We launched a beta towards the end of 2018. And 2019 was like our first sort of real year with, getting customers on and so on.
So Ed, real quick, before we bring the buyers on, a couple of things I want to point out. First off, you do have some historical track record here. What year did you launch the business in?
We launched in 2013.
Okay, 2013. And then we can't avoid the obvious. Revenue in 2019 was about how much in sales?
In 2019?
Yep.
2.2 million euros, which you have in USD, which is around 2.6.
2.6, and COVID has hit you pretty darn hard, right? So we're almost halfway through this year, and you're at about 400,000 in sales, projected to be about 800 in sales. So the business is declining. Why did COVID hit it so hard?
Well, see, with our B2B model, which was our cash cow, it was very solid, but who was expecting a COVID that was hitting events? The bulk of what we do with our B2B is for events. I don't see that, going anywhere after X time. Events are going to come back up again. And POD is our new baby. You're missing on the P&L is the historical of the POD, because we did 40K or so, but that was our first year with our POD. While B2B is going on to 2013. Some years we have double 100% growth, and some years a little bit less. Why? Well, doing different things, opening up a new model, and so on and so on. I think you have the historical. I don't know if you're showing it today.
Yeah. So in 2018, and just to be clear, you also did about 1.8, 1.9 million that year as well. So you had basically two back-to-back years with, almost north of $2 million in sales. This isn't something where it was 1 year turned on and now it's getting hit by COVID. There's serious sort of list and customer base and technological know-how built up here.
Yeah. 2017 we did 1.1, 2018 2.1. Last year we did 2.2, which is the same number, but we reduced, our losses were less, our marketing spend was less, and we launched 2 new models. So
very good.
Together,
okay. So guys, those of you just joining, before we meet the buyers, again, you're watching another episode of Deal or Bust, where founders come to try and sell their companies live. We've just met Ed, who founded PrentSum.com, which we'll put in the chat so you guys can go check out PrentSum.com. 2018 did about 1.9 million US dollars. In last year, 2019, did about 2.6 million USD. COVID has hit them hard, but he's got a lot of interesting assets inside this company. And the question for any buyer is going to be, hey, when COVID goes away, does this business pop back up to 2-3 million revenue, and can I get it today for a steal? We'll have to see if the deal happens live. We're 30 seconds away from meeting our buyers. Ed, before we bring the buyers on, any last things you want to mention about the product?
About the product? No, I'll let them ask questions. I mean, somebody just asked a question. Said it's Q4, the bigger one. Actually, I think related to COVID, Q2 is our biggest quarter of the year. So that's very impactful, because that was we do around 60% of our revenues during that quarter, and that's unfortunately gone.
And guys, Ed mentioned questions. We're watching all of you guys live. Romaine asked this question. I'll put it up on the screen. How come EBITDA is not lower with such a big hit in revenue? We'll address that. If you guys have questions live in the chat, you can ask it. We'll bring them live on the screen. Ed, real quick, name 2 or 3 of your competitors just so people can get their head in the right spot in terms of what you're doing.
Yeah, on the B2B side, or the bulk side, you could look at Custom Ink. I think that's our biggest competitor or biggest benchmark, because they're not in Europe, but they're the biggest benchmark. And in terms of our POD, the biggest benchmark would be Printful, just like you mentioned. Those are the biggest. There's many others in between, but.
Yep, very good. All right, let's bring our buyers on. So first up, Akil Jabber with Horizon Capital. Akil, welcome to Deal or Bust.
Hey, Nathan, nice to be back.
Good to see you again. So real quick, for folks that don't know what your thesis is, what sort of companies are you looking to buy, and what size?
Yeah, so we're looking at SaaS companies throughout North America and Europe. Our minimum size is typically at least 500K in ARR, all the way up to 5 million in ARR. So this looks like a good spot for us.
And how many companies have you acquired so far?
We've done about 5, like you mentioned, and we have one in LOI that we're looking to close this month as well. So.
Okay, and I half joke about this, but I only want to bring buyers on that are real buyers, not fake buyers with no money that have never done it before. So just paint a little picture here. Where do you guys get your capital from?
Yeah, so we have a couple of family offices and then a couple of high net worth individuals that we've already got pre-committed capital from. So we just we present them the deal, and we're able to close within 45 days or so.
Very good. All right, our next buyer, Mr. Ben Fall, first time on the show. Ben, welcome to Deal or Bust.
Thanks, Nathan. Glad to be here.
Yeah, thanks for coming on. So guys, Ben's background, super interesting. He founded a company called bestreviews.com, which you sold to Tribune. Ben, what year did you sell that company?
We sold right at the beginning of 2018, February 2018.
Okay, and what was the price on that?
We sold for about 110 million, but we actually sold about, and this is public, we sold about 60% of the company. So we actually retained ownership in a portion of the company, and there was some other kind of value added involved as well.
So the reason I brought you on specifically for this episode is you've got sort of a background. You've worked with a lot of folks in sort of e-commerce. Explain why you're excited about e-commerce and what you're currently doing in the space.
Yeah, thanks, Nathan. I'm excited about e-commerce for 2 reasons. I think my view is actually much of the shift that is currently described as like a sugar rush of e-com purchasing and behavior is permanent. And within this space, I'm very, very bullish and excited about the technology that can kind of connect the content that I think is a big part of how people make purchasing with the actual products. And I think that gap is going to be super interesting over the next several years. And that's where I'm very focused right now.
Very good, guys. Our last buyer today, Tim Schumacher. Tim, welcome to Deal or Bust.
Hey there.
All right. Are you still burned from last week when Jeff turned your $2 million offer down, or you feel good? You feel good about that?
I feel good, but that was a wild ride.
That was a wild episode. So for folks that haven't met you before, help me understand, what companies are you going after?
So I'm going after SaaS companies from 500K ARR to about 5 million ARR.
Yeah. So do you see a SaaS play? I mean, there's a little bit of a risk bringing you on for this one because it's not a B2B SaaS company today, at least. Do you see a play here in your world or no?
It's quite tricky because that is much less of a SaaS play. SaaS did not collapse during COVID. I think some ups and downs, of course, but it's hard to find a SaaS business which I think went down for more than like 10%. And I think here you've seen what can happen to non-SaaS stuff.
Yep, guys, and one of the recent deals Tim did was a company called Sniply, which he found via a crew at Dustin at helloexit.com. They have a great tool for valuing your company, which you can check out at helloexit.com/tools. Now, was Sniply your last deal, Tim, or how active have you guys been?
We've done 2 deals actually in the midst of COVID. We've acquired prerender.io, it's an SEO tool, and we've acquired Scraper API, a scraping tool. We're looking to buy more.
Very good. So guys, there you have it. We've just met Akil, we met Ben, we met Tim. You guys, I'm putting the P&L back up on the screen here briefly. So guys, for the next 5 minutes, it's your guys' job to ask Ben any questions you have related to the product, just so you guys all understand what he does. Let's go ahead and kick off Akil with you. What questions do you have for Ed?
Yeah, sure. My question is on the supply side. Where are your suppliers located? How many do you have, and would they all be transferring over if with a new buyer?
Yeah, no, absolutely. The suppliers, we have many in the UK and many in Spain. We have some abroad, but mainly the ones that we use are UK. So we try to keep it local because the shipping is a lot faster. So if you do UK to UK production, costs are minimum and you can ship faster. If you do Spain to Spain and so on. For the POD SaaS, now Europe to US, that's a bit more tricky. I would do US because I will speed up a lot of the delivery. In fact, Printful has a lot of issues with this. We get a lot of customers coming to us because the delivery is too long, and that's because their production is going from many places. That's really how it is. It's quite big enough that we can do. Basically, it's very scalable, if you will. And there's so many printers that if you have a good business model, you treat them right, they make money with you, they grow with you, and you can. We have printers that we work with since 2013. They've gone from little companies to much bigger. So that's least of our worries, I should say.
And just to add some clarity to this too, in terms of what's for sale, a lot of companies that are in your space, I know Customing and Printful, they have spent millions of dollars on printers. They actually own a lot of their hardware. That is not the case here, right? The assets we have up on the screen are really what's for sale with this. There's a 30,000 person list. There's all the prints, some tech. What else comes with this sale if you sell the company?
Look, I think something there's missing, which is not on the blog side. See, our blog gets a bit over 1.1 million visitors per year. I think, well, around there. Now, talking about something Ben mentioned, which is the shift of content with purchasing. We done content from day one. Our strong thing is our content and SEO, which we in turn we don't acquire the customers directly through it for a B2B model, but we push it through the SEO side. And that's really what's allowed us to spend very little marketing and produce the revenues that we produce. I mean, last year we spent 60K on marketing to produce 2.6 million. It's just a ridiculous amount. A lot of it has to do with content. I think that's not highlighted there. And there's many other things. I mean, talking about buyers, it's all about where can we add value. It's such a massive industry. We've done so many different things, and we can add value in different areas. And we've seen that because we have quite a few offers, not only from MicroAcquire, but also from Europe. And they're all very diverse. If you want me to go a little bit deeper into what these differences are, I can.
Let's talk about offers you have in a second. Ben, let me go to you first, though, on the SEO play side. We see here on the screen, again, 1.5 million views. I mean, one of your go-to-markets, I believe, at Best Reviews was a massive SEO play. I mean, you guys crushed it with SEO. Talk about the value that you see or don't see here with a blog doing 1.5 million hits in 2019.
Yeah, it's a great question, Nathan. Without knowing more about the intent of that traffic, it'd be hard for me to put like a value on it. But I do think it's an interesting insight that there's something there. Have you looked ever at any options like almost like a lead gen model, basically selling, using all the traffic and the intent to get leads and then potentially sell those in terms of whether it be for actual printing related projects or for other projects? Is that something you've entertained?
In a way, I have not. I mean, what we do is we generate the leads for us to sell the printing, but indirectly because we go through the SEO. Now, for the POD, B2B2C model, we found that our blog actually acquired lots of these people. I mean, we're getting around 700 leads for POD services at the moment, which we're not serving.
What does POD mean? Print on demand?
The B2B2C model.
Yep.
Yeah, so for that model in particular, yeah, it's definitely a good acquisition channel. Now, to sell the leads of something else, because yes, something we could explore, because the visitors are from all over the world. They're not just UK or just Spain. They're from all over, which we cannot capitalize on. So yeah, definitely an area that could be explored.
Tim, let's go to you. Any questions you've got on the product?
On the product, I've got quite a few financial questions, but not so much on the product. The product is pretty straightforward.
Go product, Tim.
Product or financial?
Sorry, go financials.
Financial, okay. Yeah, so I mean, one thing
do
is
more
like
of what you don't want to do. To keep no, do financial. Sorry.
All right. So what I'm like, you seem to get a ton of free traffic and free leads and a low customer acquisition cost. But why? And you've got a great 2019. But why is the business model then losing money?
So if you look at the historical, we actually made money our first 2 years. Then we raised a small VC money, like 140K. That was in 2016. So we spent a lot of that on growing the company and so on. That's how we actually were able to grow the revenues as we did. I mean, it's a tough industry to crack. Don't get me wrong. I mean, it's tough. It's very competitive. It's printing. To grow this quick it's very hard, and you have to put money into it. So really, we lost the money because we had the funding for it in order to open up new models or grow this. We've done all sorts of different marketing strategies. We spent a lot of money on SEM. That worked in the beginning. Later on, the data showed that after a while, hey, that's not producing the correct ROI. Let's remove SEM. What is producing the ROI? Content is SEO. All right, let's invest on that. Print on demand alone, we invested hundreds of thousands of developing the tech. So really, that's essentially why. If I were to remove everything, just keep a few things and keep it at minimal, yeah, we could be profitable.
Okay, where's most of your team? Is it in the UK or in Spain?
Barcelona. We're all of our operations.
Oh, okay, Barcelona. Okay, that's interesting. Yeah. I actually own a company in Barcelona, a co-own one. Softonic. You know it?
Yes.
Yeah. So that's the download platform is one of the Barcelona dinosaurs. Great company. Really.
Yeah, they've been at it for a very long time.
Yeah, 20 years.
Yeah.
So Ed, on that real quick, I have your org chart up on the page right now. Are all these people right now full-time? How many people are full-time on payroll?
We did a few optimizations obviously after this year. So we had limited resources when COVID hit, right? Because think about it, our cash cow was the one bringing in most of the money to do all of the other things that we were doing. Our cash cow unfortunately got hit by something we didn't expect. So what do we need to do? Or what we did was, okay, well, our cash is not producing that. All the other things that we're spending on, we got to put on pause for a minute. So we decided that our resources, or the resources that we have, are better spent on the one that's producing the most money and not so much on the newer project, despite of that could affect our future growth and the future of the company. But, COVID, it was crazy. So it's like, what are we going to do? So this is kind of why the team changed a little bit. But for the most part, can you put the organogram again?
Yep.
Yeah. For the most part, the B2B operations are very similar in a way. The merchandise manager, because that's the third model that we tried last year, for these 400K, we can go into detail if you want. We put that on pause, so those positions are gone. Head of IT, HR, is pretty much about there without a few extras. We also started optimizing towards the end of last year.
Sorry, just to make this really clear, because it's obviously we're live and we want to be crystal clear. Last month, how much did you spend on headcount expense?
It can't be that clear either, unfortunately, because obviously we're benefiting from different government programs and so on. So the direct answer is how much we spent on payroll last month was like 5K.
5K?
Yeah, because there's certain aids in Spanish aids. I'm not going to get into detail because I'll bore everyone. out of their minds with it. I become an expert with it because I had to. But yes, 5K. Our normal payroll should be between 30 to 45K to produce 2.2 to 3 million to 4.
Okay.
With that payroll, we can do that.
Tim, do you like that kind of head roll or head count sort of overhead relative to that amount of revenue? Is he muted?
I think so.
Oh, sorry for that. Yeah. Well, no, I actually don't like it that much, to be honest. But handling physical products is tricky. It's not software, so you need to push around boxes. So it's probably typical. I'm sure those people doing a great job, but that's the beauty of SaaS, that you don't have that. So. Yeah.
So Ed, before, I mean, one of the things you have to do, right, as trying to maximize the value founder, you've hustled like crazy to build this company. You've got to sort of paint a picture, right? These buyers are a blend between, I mean, they're mainly B2B SaaS, right? But there's a blend here. And so, this is like what I'd ask you to sort of try and articulate is what's the technical play here? Is there a method to use the 30,000 person list you've built of potential people that have, again, paid you to print merchandise for them that they then put at their conferences or they sell to their Instagram followers? Is there opportunity to sell them software that helps them manage their sort of social e-commerce store?
There's a play there, but I would say I would focus a lot more on the 700 leads we're getting monthly now for people that actually want to use the software for printing. They're in a way they're going to waste at the moment. Yeah, they get a nice message and so on, but that's just being wasted because it's not part of the B2B of what we're focusing at the moment because of COVID. So I will focus on that. Now, we've done a few little tests here and there with the bigger size companies where, yes, they could use the software for giving away apparel or merchandise to their customers in an automated way. We've done a few tests and they've gone quite well. But again, that would be like an additional new third model going after big size companies and selling them that software.
Akil, do you understand the software play here? To me, it's still unclear, but if you guys understand it, we can move on.
Not really. I'm still trying to understand what kind of the economies of scale here, because it seems everything is kind of custom and just one-off production. How do you kind of guarantee the quality over all suppliers? Just like a SaaS where you have one product and you can guarantee it repeatably.
Right, but that goes to our supply chain and all the different processes. Printing is complex. It's very complex, and we've made so much to simplify it. You can look at our Trustpilot reviews and see what people are saying. I think that would just summarize how we keep quality control, how we keep all the stuff. That's obviously has to do with all the processes and IT that we develop. In terms of the tech play, look, the tech play here is within print on demand. It's not on the B2B bulk side. That can produce millions, but it's going to take longer. And yes, it needs tech, but for the purpose of this, conversation, SaaS related B2B, we're going to go down the POD route. That's where Printful is at. That's where we started getting into. And yeah, I would think we were making good headway. Now, that's if you want to move towards that side of the discussion, I'm happy to discuss that part alone.
So just real quick, Ed, they're watching the video right now, seeing this stuff be produced. Now, talk us through this. This is not your factory. Do you own this hardware? What parts of the video that we're seeing is your product?
Our product, well, in a way, is the t-shirts and the stuff, but we don't own any machines. This is, again, the product you can't see because it's all the tech that's inside that allows to produce many garments in a very short amount of time, delivered very quickly in good quality. Again, on the B2B. On the B2B2C, it is individual. It is one by one. So there has to be many processes and many IT to make sure that it is consistent. That, again, you could have 100 customers and deliver 1,000 different orders to 1,000 different countries, which we've done. It's, a lot of that has to do with the tech that we have. Same as Printful, except the Printful has their own machine. So a little bit easier on that end, but they didn't start with the machines. It's hard to just set up now a manufacturing plant here, and so we use our tech to outsource it.
I mean, this is really me talking to Tim and Ben and Akil. I mean, one of the things that shocked me about Printful's model is they have sold almost $500 million worth of merchandise. Like, influencers have used them to do this. And when I had them on, I talked to them like 12 months ago, they said they are most excited about launching their B2B SaaS play, which was basically software that allow these merchants to manage this stuff at scale. And it's a pure software play. And so what I sensed in Ed was sort of an acorn of that, which I think could be exposed and expanded considering how hot e-commerce is right now. Obviously I'm not the one putting cash up here, so you guys have to see that vision as well. Akil, do you see an opportunity there or no?
Maybe I just need to understand more on the print on demand. I do see that what you're talking about on the SaaS side, but how does that translate on the financials? How much would be looking at on the actual financials specifically for that part of the business?
Looking at this P&L, that's the 46K alone for last year, in its first year.
Okay.
Yeah, it's minimal because that's, again, it's our little baby, new baby.
but Ed, that's a pure piece of software.
No, that's a combination of both. That's actually but it does have much higher margins. That's around a 50% margin on the product itself. That's actually not monetized through selling the software, which is what our intentions were or are when you have a lot more users. You can say, for example, a lot of these people need graphic design help. You can have a subscription where you offer that. Some people need different services, express delivery. Some people want their deliveries to be quicker. You can charge for that. There's many things that different customers want that you can put them in different subscription boxes. That is our goal for that model, but we're just starting with it.
Yeah, Ben, let's go over to you again real quick here. So you can kind of get a sense of what I'm trying to do, which is try and look at the asset Ed has already created and see if there's a higher margin software play that is more insulated from things like COVID, right? You're a smart business guy. You did the Harvard thing. You run a couple companies. You sold one for $110 million. I mean, when you look at this, do you see assets here that you feel like Ed has not exposed yet, but could have big promise in the future?
Yeah, it's a great question, Nathan. I mean, there's something there with the website traffic that I alluded to earlier with lead generation. I think there could be something with the newsletter and the customer list, given that you have those insights around them. Have you tried, Ed, much around kind of a cross sell or some sort of cross promotion even with that existing customer base? Because if you think about it, somewhere my hunch is you've got
Ben's got dog. That's okay.
My hunch is you've got some sort of procurement level relationships on the B2B side that in theory have some value. Have you looked at anything with monetization on that side?
You mean like cross-selling other products like phone cases or things like that?
That would be one, which could be done through a partnership or direct, and the other would just be creating basically almost a lead generation model for other people who are trying to build those procurement relationships. And that to me could be a software product where people have effectively access.
That's a very good point. And it's actually very tied to different types of acquirers that we're, in discussions with. There's a lot of people that do coffee mugs and do phone cases but they don't do apparel. We focus solely on apparel and we haven't gone into other products because there's something you got to understand. I founded the company with the intention of selling it. I didn't plan on having it for 20 years. If I did, then yeah, I would have probably added other products. But this is where we're interesting for certain buyers where they're doing all this other stuff and they don't have apparel. Great synergy. Yes, they can use our customers to sell their stuff and we can use theirs to sell apparel. Good combination and we can multiply the growth. In fact, that's what we're looking in terms of the right acquirer. I don't know if it's the right time to talk about it, but I'll go over that in detail whenever.
Yeah, Ed, what are you looking for?
Look, so my thing is about value. Where can we add value to somebody? And because we've done so many things and the industry is so massive, we found that we add value in different areas. We've got tons of interest from micro acquirers and lots of interest in Europe, and each of them are looking for something different. So I'll give you a few examples of what I'm discussing with, and then I think you can understand. So some people or some companies are interested in our business processes and our digital presence and our marketing because they've been at it for 20 years and they're doing okay, but they don't have any digital presence. That's one. Two, we have a B2B or B2B2C marketplace that they sell the shirts within it, but they don't offer the software. So they're missing out the whole customer cycle. We're completing their cycle. We have another one, big size company, doing really well, good marketing, good digital presence. Now they do a lot of stuff, but they don't do apparel. They're looking into apparel. All right, how do we get quicker into apparel? Well, might acquire Princeton. We have US customers that are looking to expand to Europe. I mean, it's not easy to come to Europe for those of you who know, especially coming from the US. Like great landing interior. We can go into any country at the moment. We're set up for it. There's other even financial investors at the moment looking into, hey, how do we stabilize this, keep it going, and then make a bigger return 5-7 years on the road? So again, it goes in many different routes of where our value is.
Yeah. So guys, we're about 60 seconds away from talking to the experts and then letting the buyers pop back on and decide if they want to make an offer here or not. If you're just now tuning in, you're watching another episode of Deal or Bust, where founders come to try and sell their companies live. We've got 3 potential buyers, Ben, Tim, and Akil, asking Ed great questions about his business, PrentSum.com, which did $2.6 million in revenue last year. There's some components here, but the overarching concern is there a higher margin software play here? Or Ben is kind of hinting about, is there a referral model, maybe an affiliate model or lead gen model with the great marketing asset Ed has built with 1.5 million folks hitting the blog last year alone? All of those questions are up in the air. We're going to talk to some great experts here in a second to do that. But I just also want to say we are watching the comments. We see you guys asking great questions. We see you in there, Gerard and Ed. I want you to know people like Gerard, they're loving you. They're rooting for you. They're hoping you get a great deal done here. So with that being said, here's what we're going to do. I'm going to quickly go to each buyer, get a sense of where your head's at. We're then going to remove the buyers from the show, bring on 3 great experts who I can't wait for you guys to meet, and then go from there. So Akil, let me go to you first. You know now at least a high level about the business. Do you want to take, again, these 5-10 minutes, think about it, and are you in a position where you think you might make an offer after?
Just if I can just ask one quick question, just, you mentioned you have a couple of buyers lined up. From your perspective, why are you looking to sell?
Good question. Great question. I want to start other businesses. I want to invest in others and get involved in other businesses. I'm not particularly a t-shirt guy. I'm a business guy. I just love everything about business, all the different areas. We built it to sell it. So again, no particular rush either. I mean, the acquisition side of things, me and my co-founder are more than willing to stay and obviously do things for as long as it needs. Again, if we're gonna value and grow together, then great. But at some point, I do want to exit. So that's really why. I just want to do it.
And just to be clear, because this is always important for buyers buying a company, they want to make sure that the cap table is not super crazy, where there's 1,000 people that own 1%. We're looking right now at a live shot at who owns what portion of the company. So you own about 67% of the company, correct?
Correct.
And will Faraday Ventures and your co-founder Paula and Venture Cap and Jess Mileni, the angel, will they all go along with whatever decision you make here in terms of if you want to sell or not?
Well, we've been in discussions already with different deals and so on. So I think I have a good idea of what will be voted on. So I guess I can, yeah. Okay,
great. So Akil, yes or no? Do you want to learn more or are you out?
I'm interested, yeah.
Okay, let's go to Tim. Tim's the one I'm nervous about because this is not his sweet spot. He may sense an opportunity. Tim, let's see what you say. Are you interested or are you out?
I think I'm out.
And why?
It's just not my type of business. It requires an operator who is good with physical products, with e-commerce, consumer products, and they're better people than me. So for that reason, I'm out.
Thanks, Tim. All right, Ben, let's go to you. Ben, where's your head at? I just removed you. Sorry. Where's your head at?
Yeah, I mean, I love Ed and know enough about this space from some other people in the ecosystem, know how hard it is to build something here. But I think that the ability to turn it into SaaS and really scale that side of the business with that margin profile I think it's going to be a hard road to hoe. And the ideas around affiliate and lead generation are also interesting, but I think they're more challenging than they might at first appear as well. So for that reason, I think I'm out.
All right, Ben, appreciate you, man. So Ed, let's go back to you now. So look, we've got Akil, right? He wants to learn more. He's particularly interested, ask the most questions, I would say, between Tim and Ben in general. So he's going to now take 5-10 minutes off. We're going to bring on a couple experts. Where's your head out, though? Two folks out, one interested.
Well, where's my head at? No, completely fine. I mean, great feedback for sure. Again, I've talked with plenty of investors over time, and so this is just not a fit. So it's all good, dude. I'm just having fun.
All right, let's meet first expert bringing in here, David Hauser, who built Grasshopper, $30 million in revenue. David, remind us when you sold that Grasshopper, what year?
About 3 years ago.
3 years ago, now an author of a great book called Unstoppable, an angel investor, and building Superfat and Delegated. So David, you've been watching behind, backstage here. Where's your head at on this company?
Yeah, so I think it's really interesting. I think the asset I see is really the blog and traffic, right? So I'm curious about, what that blog traffic looks like outside of Europe, because I think that's very interesting to a certain set of acquirers. And then just looking at the website, like I am concerned like how much software there really is. Like when I hit start a quote, it's just a type form, right?
Yeah.
So like how much is manual, how much isn't? And then, lastly, like I am thinking that there's a lot of opportunity here for some good optimization and A/B testing. Like the site just doesn't seem very optimized. Like you're on the homepage, you have two different call to action: start a quote and meet the team. And meet the team is almost not valuable, right? And now you're giving people two options, so they get confused. I'm just concerned with that.
Ed, what are your thoughts? This is your show, man.
Oh yeah, no, so, I thought you were gonna ask a question. What was your first point on the?
It's not clear. The front of the website's not clear how much tech is actually involved in this platform.
Oh, the tech. Yeah, no, a lot of our tech is behind the scenes. I mean, if I show you demos of what we got behind, you'll be very surprised. It has to be behind the scenes because we're doing something very complex, trying to make it very simple and offer a great customer experience. To be able to do that, I mean, you think about pricing structures alone. Our pricing structure mixes 10,000s of different prices for different printing techniques, for different quantities, different places, different deliveries. So we make that very quick, which is, nobody really is able to do that at the moment, especially when you're doing big size orders. In terms of the website and the conversion rate and so on, yes, obviously we're always working on the A/B testing. This year has been an odd one where we haven't done much A/B testing in the last, few months. But yeah, we definitely had a team where we do A/B testing, this and that, for quite a bit. So we need to look into it deeper. But again,
what does non-European traffic to the blog look like? What percentage?
Well, good question. I think from memory, more or less, to the blog, I think the majority is US based. But I can't tell you a percentage because I can't. I do know that the majority of our main website traffic is European based, but that's how we work the SEO through the blog.
To me, that's very interesting, right? Because you have both a European presence, which is difficult to build for a US company, but also you then have a significant amount of US traffic coming to the blog that is not being converted, right? Yeah. And if you look at just market size, it is easier to capture that US market, as you see with Printful and whoever else doing a bunch of different things.
Yeah.
Right?
Yeah.
So that traffic seems highly valuable to me.
Mm-hmm.
Hey guys, let me jump in real quick. So David, you're asking buyer questions, which I love, and maybe you jump in there, but I also it would be stupid for me not to use you for a different reason, which is you've sold companies before, right? Most sales are sales of companies like Ed's. It's not growing 1,000% year over year. It hasn't raised $1 billion in VC. It's sort of like maybe would call it a flat to declining asset. He's got a side project he wants to go work on. How does Ed maximize the value of this company today so he can get as much cash as possible to go reinvest in his new project?
Yes, I mean that's kind of my question around these other assets, right? Like, how do I position this as to be most valuable possible, right? Like, so there's things in this business today that you are not valuing that I think an acquirer probably values far more. So, non-European traffic, so US traffic to the blog, and how do you convert it? Optimizations around software. So, is there software that I don't see, right, that is highly valuable? Because from an external perspective, it's hard to see that. Right. And then answering the question, like, why not expose that to customers? Right. Are there other things internally that you have valuable, like very close relationships with printers, right, that don't want to work with others or don't work with others in some sort of exclusive relationship? Access to other markets outside of, Spain or the UK, right? Like, are there ones that are already set up and ready to go that another buyer would be very interested in? If I'm just looking at the highest level, to me, it's like, the marketing asset, how can that be utilized the best for different acquirers, and how do I accentuate those positives, right?
Cool. Thanks.
So, I mean, do you, Ed, with that sort of angle, I mean, are there things that you think are assets you're sitting on that you haven't yet articulated? I mean, to David's point, what you're trying to do, if you're trying to maximize valuation, is try and make the software more prominent because the margins are better and it's just a sexier business. But it's hard to do that when you can't see or use the software, right? To David's point, on the homepage, you don't see it as a type form. How do we make that real so buyers understand it?
Well, Top work is all behind the scenes, and I wouldn't even show it on the show because that would be so people could copy it. it has to be the right profile of buyer that's interested in the process because they're in the printing industry. If it's in the marketing
sorry,
side,
just explain it real quick. Let's say I post almost naked selfies on my Instagram all the time, and I have a massive following, and I now come out with Latka leggings. Okay, Latka leggings. They're for sale at nathanlatka.com/leggings. And I want to use you to sell them. I go to your site, I sign up, walk me through, like, what tech am I going to use to get those into the hands of my customers and drive sales?
Right. So you're on the POD side, or B2B2C. So you need a Shopify store to start with. So you will connect the app to your Shopify store. You upload your design, select your products that you want to sell. So leggings in this color, this type of size, etc.
Wait, this is the print on demand. That's a very small part of the business, right?
Yes.
Talk to me about the software that's make up most of the business, right? Like, tell me, I want to hear, like, oh, look, we take this type form, and other people take 100 man hours to turn around a quote and make these shirts. It takes us 4 hours, right? Like,
right.
What's happening behind the scenes with the majority of the business?
Right. So now we're moving back to the B2B. I don't mind moving from one side to the other. So look, on the B2B side, which is where you're going, which is the bulk. So once you send out the type form, it goes into our platform, which we built within the Salesforce platform. Now there is going to be tagging, this is that garment, this is that type of printing technique, this is the quantities. We have account managers because our average order value is around $1,200. So we're dealing with a bigger size kind of volume. So we can produce a quote for you, multiple quotes within minutes that I can assure you nobody can. And if you do it online, you're not going to do it yourself because it's $1,200 or more that you're buying. So you need somebody to help you out. What we created is so that person that's helping you out can do things very quickly, smoothly, and can produce it for you very quickly, especially if you're an event side. So look, LA Galaxy had, I don't know, it was 5,000 jerseys that they needed to print within 5 days because that's where their cap was done. I mean, you go to another company, it'll take you 3 days just to get a quote and get that sorted. And then let's not even talk about the printing. This was done in 5 days' time. This is the kind of customers that we work with on this side. And it all has to do with the tech that we have within that model, the processes that are optimized for it. Pricing structure, insane. Production, insane. Again, it's been, 7 years of optimizing little by little and this and that and that and that. And there's more. There's plenty that we can continue optimizing for sure. I mean, custom ink started this way.
David, isn't the challenge, I mean, you can see on the screen here, right? 80% of the revenue are these bulk orders. It's like, we run the Ed, Nathan, David conference, and we want t-shirts printed 5,000. We're going to use Ed to print those. The issue is that's not a sexy thing to sell right now because no physical events are happening. Sporting events where jerseys are needed aren't necessarily happening. So like, how do we communicate how valuable this asset is in a non-COVID world and try and sell it right now when these sorts of things are dilapidated or decreased, the revenue is cut in half?
So the thing I would think about here is, right, like, how do I position this in this COVID world, right? And say, like, look, here's the testing we've done that shows that while events are down, people want to print shirts more and mail them out. We're going to mail them out. So we're adding services. So now companies that can't physically touch people can touch them with a shirt, right?
Ooh.
Like, how can I do things like that? I want to see proof points around that.
You're very spot on one of the things that I wanted to do, which is mixing the two. Obviously, this is COVID situation. I'm like, okay, well, we have this print-on-demand solution that is made for these guys, and we have the B2B. Now, how many events are going online right now? There's many. There's lots of webinars and so on. How many of these people want to give some kind of merch to their viewers, whether it's for free or to raise money for a donation or to even sell it because of their brand? There's probably many as well. So if I were to combine the two, where you do a webinar, so Nathan, now you offer 100 free shirts to your guys, you give them a code that they go to your store, put the code, that goes through a print-on-demand software, and they get the shirt delivered to your home.
Right, and I would think beyond that, right? Like, how do I get companies that all their people are working from home and taking sales meetings at home and externally, right? And they have on a plain black T-shirt when they really should have on a logo T-shirt, right? Like, how do I get people to buy that stuff today and buy it in bulk, right? So I'll buy all 10,000 employees a shirt and I probably have to buy them 2 or 3 because they're working at home every day, right? So, like, how do I do things like that?
Yeah, it's such smart advice, David. I really appreciate you doing this. We'll see what happens. Those of you just tuning in, again, deal or bust, printsome.com. Ed, the founder, looking to sell the company to $2.6 million USD last year. We've got one buyer left interested, Akil. The other 2 dropped out for a variety of reasons. Akil's going to come back on in about 7 minutes, but we have 2 experts we still want to hear from. David, though, again, great advice. If people want to learn more from you, where can they find you online?
davidhauser.com. I have a weekly email list. I'm on social media as well sometimes, but not as much. And I'm happy to help any way I can. Thanks, Nathan.
Thanks, David.
Thanks, David. Man, good stuff there from David. Next guy really spends so much of his time helping products get going. His name is Mark. Mark, I don't want to butcher your last name, bro. I'm going to let you say it. How do you pronounce your last name?
Kilbrugge.
There you guys have it. He's the founder of BetaList, which what's the number? What are the numbers, Mark, right now behind BetaList? I see so much activity happening.
So I started it like 10 years ago. So it's pretty old by now, but it's still doing well. But in terms of numbers, I think we've featured maybe 40,000 startups so far. And we get like a lot of submissions every month of startups that want to get featured. And I think we get a few hundred each month. And then every day we pick about 5 and we feature them on the website, and they get a lot of early adopters, customers, that kind of thing.
So the reason I want to bring you on, Mark, is because there's probably very few people on earth that have helped so many founders tell the right story on their BetaList listing. The story is really, really critical. If you had to sort of, tell Ed what story he should use right now, in a COVID time, a thing that, helps folks print t-shirts to send. It used to be physical events. That's not an option anymore. What story would you recommend he uses for this business today?
It's a tough one. Like, I had all this preparation when watching this, but I didn't prepare for this question.
Okay. You go your own way. You go your own way then. Ignore my question.
No, I think like in general at BetaList, we see a lot of startups describing their product as like the new innovative thing that's going to change the world. And what we always say is like, just describe the product, like how it's different from the rest, how it's better. And it's pretty straightforward. But if you're doing, I think $2 million in annual revenue, I think you already got that down. Otherwise, you wouldn't get to that point. So I think you got the pitch down if you are that success already. Some other things, though, I thought about when I listened to it's not really an interview, I guess, but I listened to you guys. First, I want to say to Ed, I think it's really good that you really know what you want. Like, you want to sell this business. I see a lot of founders coming up on the program, and they kind of want to sell maybe for the right price, but they don't mind continuing. And I think it's very difficult to go that way, because then where do you focus on? Like, where do you focus your time on? Like, do you grow the business? Do you get more customers? Do you expand revenue? But you know what you want. Like, you want to sell, maybe not today, but you have a clear goal. So I think that's really good. Unfortunately, I don't have much experience with that, so I would talk to like the buyers, for example, see what they think is important to make the business ready to sell. But I think one of the pieces of the puzzle will be proving the print-on-demand side of the business, because I think you said you just started that, or it's only like a small portion of the revenue. Yeah. And so I got some ideas for that, on how you potentially can grow that part of the business. And then when that's growing, that's like a nice line for this way or that way. Mm-hmm. Mm-hmm. Up and to the right.
What is growing today, like last month, what is growing the fastest right now? You have, selling t-shirts to events. You have print on demand, which is like the influencer printing legging, a round of 100 leggings or t-shirts for their followers. Like, what's growing the quickest?
Look, the good thing you mentioned the graphs, because I use this quite a lot. Our B2B model, it's a nice steep going graph. Our POD model is flat, and then we hope that it becomes, a more steep going upwards. We're starting at zero. We're seeing the bottom of it, and we were just looking at like, oh shit, yeah, this is going very nicely. It's gonna, because it's like, again, it's the product that is like a SaaS. I sign you up, you sell your leggings today. Now next month, what? You're gonna sell more leggings, and then you're gonna add a t-shirt, and you're gonna sell something else. Now it is like a snowball sort of effect. Therefore, the graph grows much bigger. Right now, I mean, our growth is pretty flat, obviously, because COVID. Our POD side is a bit on pause, and our B2B is the one that's still doing stuff. It depends who we can partner with, really, because again, we're doing for an acquisition, but we're very open for merger types as well.
So Mark, before I want to use your brain while you're on here, drop a value bomb here. You said you had some ideas on the POD side. Before we move on to our next expert, what would you do on the POD side that you think would have the biggest impact on revenue?
Yeah, so I always try to think like, okay, this is my business. What does the customer do after they stop using my product or they've used my product, and what do they do before they use my product? And so I think in your case, for the print on demand side of business, it's a really good question to ask yourself, like what's happening before someone starts selling t-shirts and that kind of stuff. Well, they need design, right? They need a designer. They need. I think it's something I used to do a lot is I participated in design competitions where like someone posts like a pitch and then everyone designs t-shirts. For example, on I think 99 Designs and Crowdspring, those kind of websites. That's where businesses come to get the design for a logo or for a t-shirt or anything like that. Mm-hmm. But then the next step would be your business. So I would see if you could partner with those type of marketplaces where design is kind of like being generated. And then I would also look at other places where people, how do you say, like where people need t-shirts. For example, I see Morning Brew. I don't know if you know the newsletter Morning Brew. One of the things they do in the newsletter is like they do a refer a friend campaign, where if you refer a friend to the newsletter, they give you a t-shirt or something like that. So I would look into, like personally, I would look into like building like a refer a friend type of product, give it away for free. And then when people do need to print t-shirts, they go to you. So you can basically build all these tools that people are currently charging for, but you can give them away for free because they are all lead gen tools for your main business. Mm-hmm. And then, of course, for me, I would build those because I'm a pretty quick builder. But if you have some money and you want to move fast, you could also look into acquiring some of those businesses that are already doing that kind of stuff, but might not be monetizing it well yet. So I think in that case, something like micro-acquire might be interesting, not just to sell your business, but also maybe to try and buy a few small businesses to see if they can help accelerate the print-on-demand part of your business.
Mark, we appreciate that feedback, man. If people want to learn more from you online, where's the best place to find you?
I guess Twitter, but my last name is very hard. It's twitter.com/Mark Kulberger. So good luck with that.
Betalist.com, guys, is another place you can look to find what Mark is doing. Mark, thanks for coming on Deal or Bust.
Thank you. See you.
All right, guys, very good. Our last expert is Jaco. If you're just joining again, you're watching Deal or Bust, where founders come to try and sell their companies live. I see you guys hanging out on YouTube. I see you on LinkedIn. We see you jamming on Twitter. And when you guys ask great questions in the comments, I bring them live, like Mountain Man saying, great show. Michael had a great idea about introducing Ed, you to the Snapbar founder who got hit hard with the live events industry, but has pivoted very quickly. Darwin putting great feedback in here. Romain saying, is there any way to sell on a big platform like Amazon with already built products and moving away from customization and looking for scale using a massive platform? Ed, is there any play here with Amazon or no?
Amazon started doing their own printing, Merch by Amazon, a couple of years ago. So you know they're just doing it for prime customers. Going to Mark's point about a marketplace that where people are designing shirts, that could be. We're in talks with a company like that. That's very synergistic. That kind of profile.
Have they made an offer to acquire the company?
Say what?
Have they made an offer?
We're in talks still. No, not yet. Well, I know there's quite a few of those in the US. This is a Spanish company, so things move a bit slower here.
Well, let's chat with Jaco here before we bring on again Akil, who there were three buyers, Tim, Ben, and Akil. Akil expressed some interest. He's going to come back on here in about 4 minutes and let us know what he's thinking. He's going to make an offer, or is he going to drop out and tell us why? We'll see what happens. But first, the one and only, winning by design, Jaco. Welcome to Deal or Bust.
How are you?
Good to see you. Have you and Ed met before, or is this a first?
This is a first, but he will remember today.
Well, let me introduce you. So Ed, Jaco runs as a co-founder and co-CEO of Winning by Design. He's also a keynote speaker and author. Jaco, really interesting product set here and a very interesting space. What's the sales opportunity that you think Ed is doing a good job at historically, and one that you think he could really double down on moving forward?
Ed, how are you?
Good. You?
Hi. Ed, what's going on in Barcelona? Tell us, what is the number one news thing in Barcelona right now?
Messi's quitting.
Messi is quitting.
Oh, leaving. It's not quitting. It's leaving Barcelona.
He's leaving Barcelona. Kai, right. That's number one thing. Number two thing, your solution, as most commonly, is right in front of you, okay? And so if I bring up the numbers, Nathan, if I could be so kind to bring up the numbers, 2018 and 19 and 20. Okay, when you see that number there, 2019 to 2020, this is what it's screaming at you right now.
Pull up.
V1.
Pull up.
You are having, from most perspective, you are currently having a business in distress. You can, if you do not have an answer to that, this will be a business in distress kind of sale. So I'm going to give you advice on how you're selling your company, and at the same time selling what the opportunity is here. Okay, so I'm going to ask Nathan if you can bring up the homepage of his product.
I will do that. Yep, keep chatting, keep talking.
While I have that, what like how many salespeople do you have, Ed?
2.
2, and how much do they sell a year?
Like in total?
Yeah.
2 million.
Okay. What you currently see is what we refer to as an open loop system with a problem on the product side. If I look at this product that you have at the top, if I look at products, how many different products do you sell?
The t-shirts, hoodies, jumpers, these. 1, 2, 3, 4,
Okay, that is a problem. Because what we see right now is like Messi, like Messi is leaving, your customers have left you. And that primarily is because you're not selling the product that you want. Now, you can say this is because it's event business. I'm trying to let you know, Ed, your solution is staring you right in the face.
Oh, the face mask. I knew that was coming.
If you're not selling what the customer wants, then you're going to get the metrics that you see over there. You're not selling the product that the customer wants. I mean, like, I don't need t-shirts right now. I'm wearing soft pants and, like stuff like that. You're selling the wrong product. Now, second, what you need to do to be successful in this is focus the living crap out of something. Now, you got great assets going for you, right? And everybody said that you got blog, you got traffic, you got printing capacity indirectly, you got that stuff. You're just selling the wrong product right now. It's staring you right in the face. Now, what I loved even, is the advice if you combine this with the new way of thinking. How can we connect the product of webinars and so on, and from a B2B side, how we can connect that to these things that everybody's waiting for, because we don't have many of these. Now, what you can see, by the way, does anybody see that? It matches, both have lightning. Like, that's cool. That's great. If you sell the company, I have to tell you now, if you fix the product, that's number one. If you look at the new target market, those with sessions like Nathan and others that are doing this, if you look at an audience, a company that wants to engage with the audience, then it becomes clear that you need partners. And these partners that you're working with are a new generation of partners. I don't think you need to go the direction of, like what you do, print on demand towards B2C. I think you need to go print on demand B2B. I want you to get heck out of the ways of custom ink and Amazon. Like, let them do their thing. They have higher volume, and this is going to be a volume game. You specialize at things. Questions or thoughts? Where do you go with this?
No, I appreciate that, because that's, again, with COVID and all that, we're like, well, I don't want to pivot because we got these things going on, but obviously, we're looking for solutions. Where can we sell more? I mean, the face mask, tricky because of the smaller amounts, you have to sell a lot more face masks, but definitely something, I mean, we could at least highlight on the website. That's a fact. But the POD B2B is something I've been playing in my head for the last few months. Now, I also haven't wanted to go run and, okay, let's pivot into this or do that because, hey, nobody knows what the fuck's going to happen in a bit. So, oh, sorry, should have said that word. But you don't know what's gonna happen, so I haven't kind of run into it. But that's where my head is going into. It's like we got this POD product that was just starting for the B2B2C. We have this B2B where we have great experience. I think it's a great time for combining both, which is what you're kind of saying that we do. So yeah, I appreciate it. It's just validation in a way.
To me, there's not much difference between B2B and B2C. When is a company a B2B company and when is it B2C? If I buy 20 products, am I a B2B? if I'm buying 200, at which point in time is a B2B and a B2C? All this is a volume of the customers and how much they're buying. Now, here's where I want you to think of as a difference. And years ago, I wrote a book, and and I wrote that book, and everybody says when you write a book and you publish through Wiley and stuff like that, you got to charge it $19.95 and $24.95. I don't know about you, but I never heard a B2B buyer, one of my peers, saying, "I'm not going to buy Jacco's book because it's too expensive." Nobody. And so we started selling a book at $90. Mm-hmm. Why? Volume was lower, quality was higher, and so on. So we sold it at $90. Who says to you that if you're not, that you have to play the volume game with low price? I'm not saying that these things need to be sold at low cost. If you customize me, if you give me a great experience, you have all the services, you have the custom services, sure. Like whether this thing is going to cost me $1,000, $1,200, $1,500 is not an issue. That's a very good
point, and very in line with us because we're not the cheapest. In fact, we're in the top end of what you're going to pay when it comes to buying t-shirts and apparel. So good point. Good point.
Yeah. And what I want you to think, and for the listeners, I want you to think of the following. When you sell, the more product and the bigger customers you sell to, your service matters and the product is for free. When you sell on the low end, the product matters and the service is for free. So low cost, you want, you buy the product and you expect the website to be smoothless. On the high end, you say like, hey, look, I don't care much about what I pay for the product, but I love the service, custom, 24/7 available. I could get a straight line to the CEO if something goes wrong. That is if you put yourself at that higher end, make sure you offer them the service of which most of them you already do.
Yeah, that's the space that we're at when it comes to printing. Oh, nice.
Jacco, drop in value bombs, man. If people want to learn more from you online, where can they find you?
I love to say, go to our YouTube channel, youtube.com/winningbydesign. Look me up on LinkedIn. Many of you after these sessions reach out to me. I get literally I love these, that you guys confirm that you watched, that you enjoyed, and you appreciated the advice. So LinkedIn, just write in a note that you saw here, and I be sure to accept it.
Jacco, make sure you put your YouTube link in the chat, and we'll have Darwin on our back end put it up on the screen for everyone. Okay.
Okay. One more thing, Nathan.
Yep.
Okay, I have to say man, this show is so engaging. I want you to know, do we get 2 days of heads up on the information that happens here? We get nothing.
You want more heads up, or you want it to keep being a surprise?
No, we are surprised. What people don't know is that Nathan does a really good job of bringing us in the last moment, and we are like everybody else on the chat. We are exactly alike. We see it when you see it. We experience it when you experience it. So it's a magnificent format. And I think from all of us who are watching week in, week out, Nathan, please keep doing this. We love this. We love what you're doing down here.
Thank you, Jacco. I appreciate that. And I have to say, look, Ed, it doesn't work without founders like you coming on. I mean, you have to be so vulnerable, so confident. I mean, it's live. We get thousands of people watching. So I want to give everyone a chance to root for you. Guys, we've got one buyer left. Show Ed some love by clicking the like button, whether you're watching on YouTube and you click the like button, or Facebook or LinkedIn. Click the like button right now. And if we get more than 50 folks clicking that, we'll make sure to do another great episode next week and the week after and the week after that. While you guys are doing that, let's get into Ed's head real quick before we bring the buyer back on. Ed, some pretty good advice there from David, Mark, and Jacco. Would you agree?
Yeah, for sure.
It's always a question of what do you focus on? There are so many ideas. It's what do you focus on, right?
Sure. Well, I mean, I was already starting to focus a little bit on the POD B2B side. It was pretty in line with a bit what David said too. So that's 2 out of 3. Well, that's
Yeah.
We'll continue exploring that. That's for sure.
You're exactly right. I want to say, Mark Bromell, we see you in the comments. Gerard, we see you. By the way, I have a big fan of Gerard, Ed. I think he says one of the biggest hustlers in Barcelona. So good to see you. John Lane saying he loved Jacco, and Justin saying smash the like button. So guys, again, we're going to bring Akil back on, but I want to take this opportunity to get your guys' feedback. You guys have the P&L. You've heard Ed give great answers, great feedback. We've seen brand new ideas like masks. We've seen David Hauser talk about software. We saw Ben talk about, hey, have you thought about a referral sort of business, a leads business? Your SEO play is strong. How would you guys value this business? 2.6 million last year in revenue. COVID has hit it, but Ed still has great software. If COVID, again, we're gonna have something to solve COVID here in the next year. If you think the business bounces back, you potentially get it right now for maybe a great deal because Ed's got a great side idea he wants to go build. So what would you guys buy the business at? Go ahead and say it in the chat. 2.6 million last year in 2019. Year to date so far, $428,000 in sales. Projected this year to do about $890,000 in sales. So cut, call it more than a half in terms of revenue cut. But again, we think that revenue recovers after COVID. What do you guys value the business at? Ed, while the audience is asking that, how do you value the business? What kind of deal do you want here? What's the perfect deal?
Look, we're very open to any and all sorts of deals. Sorry to correct you, but I don't have a side project I want to go into right now. I want to do other side projects later on. What I'm looking to and why I'm looking to sell today is because we have, obviously things are tough. I'm not gonna lie, it's freaking COVID. But I think we have a lot of value to add for the right buyer, and that's being shown by the interest, by the feedback, and so on. So I think we can grow a lot quicker by partnering up or getting into an acquisition with somebody. Again, I don't mind staying for a bit longer and helping that transition out for as long as needed, but I think it'll be much faster than us on our own. And what I don't want to do is stay with this 10 more years. That's a fact. I might a few more years. I think we're going to go a lot quicker with our know-how, with what we got going on, and with somebody else's, whether it's expertise or also know-how or synergy with us. That's where things are gonna click.
Abhinav in the comments is saying $1 million. That's what I'd value this at. I mean, do you have a price in mind? What would you sell the company for today?
That's an okay target, yeah, for sure. Considering there's many other aspects into the deal. Whether I have to stay, what is the value that we're gonna get together? This is gonna be buy it right now, see you later, or this is gonna be over time. All these aspects, but I would say that's an alright value for straight up, see you later kind of thing.
We'll bring Akil on in a second. He's the last buyer left. The other two dropped out early because they're not focused on this sort of product line. So we'll get Akil and we'll let Ed go back and forth on the deal here in a second. But if you're watching going, oh my gosh, I love this stuff. I want to come on as an expert like David Hauser did today with Grasshopper and Mark did and Jaco did. Or maybe you want to be a buyer like Ben and Tim and only serious buyers. This is one thing I do. I actually do significant research into every buyer to make sure they have capital to actually do a deal because I never want to waste any founder's time. It takes a lot of courage to do this. So if you're interested and you want to support the show, go to nathanlatka.com/casting and just pick the button you're interested in. Buyer, seller, or want to potentially come on as an expert. All right, Ed, you ready? We're going to bring Akil back on. All right, Akil, welcome back to Deal or Bust, man.
Cool. Welcome back.
Did anything surprise you about the feedback that the experts gave that you hadn't already thought of?
No, so the entrepreneur and the marketer in me agrees with everything they say, and I see there is a clear opportunity with this business. But the investor side of me, what we always look at is the risk, and at the end of the day, what we need to do is risk mitigation, and that's how we kind of assess the value of the company. The clear elephant in the room here is COVID. At the moment, Europe is getting hit again by COVID. Numbers are going up in Spain, and then government help will probably stop in the next month or so. How does the business look like if the second wave of COVID was to hit?
I think the second wave is already here, to be honest. UK is obviously I have family in the US. I'm from Puerto Rico and I lived in the US many years. So I don't think things are any worse or better. I think everywhere it's a bit of a mayhem.
And why COVID? I hate saying this because this is going to get put me on the, people are going to hate me for saying this, but let's turn this liability into an asset. Okay. If you try and make COVID your ally here, you sell more masks. Can you sell masks today? Can you pivot the production, the line, the software to sell masks?
We sell masks already. It's just not being promoted on the website, which to their point, something we need to get on. That's for sure.
Have you sold?
No idea right now. Not many.
1,000 or 10,000?
Nah, like 1,000. I mean, there was a huge bump right when it happened. Then it stopped, and I think there's gonna be another bump coming up when people are more okay. I'm gonna buy masks, but now. It hasn't happened. The second wave, if you will, of people buying masks hasn't happened yet. In terms of events, I mean, the question mark is when are the events are going to come back, if you will. But let's be honest, we're in an industry that's been going on for hundreds of years. Like it's massive. It's not going anywhere. So again, what I think what we're selling today, in a sense, is look, I think we can offer a great value deal. To the now. Otherwise, some people comment and they're, hey, maybe you just wait and sell it for way more later down the road. But I don't know. I started the process a few months ago, even before COVID. again, I'm in a rush, absolutely no rush. If I have to stick with it for 2 more years and bang it out with whoever comes in with me, I'm fine with that as well. So,
so Akil, where's your head at here? Do you have any follow-up questions on the P&L, the product line, anything like that?
Yeah, mainly on the P&L. So I think I want to get back to today, what the real story is. I like what you did in 2019. That's awesome. Today, what does the last 3 months look like? What is the actual sales? If I'm moving forward and COVID continues for another 2 years, what is sales in the last, say, 3 months? Average per month. Yeah.
The last 3 months. What are we on? August. So July, June, May. I don't know, about 100K between the 3 months. So minimal. Our first quarter was around 250, something like that, around there. So again, this quarter, it just happened to be our best quarter of the year. Second half of Q2 and into Q3. So April, May, June, July are our 4 best months. So hence why it's
sorry, we have to make this really clear. Otherwise, Akil's going to be confused. He's not going to be able to make an offer. This is just true for any sort of thing. So what he's really trying to understand is if you took the company over today, what does it look like tomorrow when you're not involved? So let me repeat what you just said and see if it's accurate. You said over the last 3 months total, you've done $100,000 in sales. Is that accurate?
Yeah.
Okay, so that's the company that is still declining very fast because your total sales to date this year has been 428,000. So if you sold 100,000 over the past 3 months,
it's actually going up, because if you look at the curve after COVID, which we should have put this on a graph, it's actually an uphill curve as opposed, because April, we sold in April 0, like 5K we sold in April.
Okay.
Then it went up to, I think, 20, 25, 35, and so on, and it's going up. So that's something that perhaps we should have highlighted, because yes, we've been hit, but the trend is actually going up, maybe a little bit down 1 month, and then it goes back up again. It's just a matter of how things are going to move.
So Ed, let me repeat it back to you just to make sure, again, I understand and Akil understands that you basically did before April, 300,000 USD in sales. The other 100-ish thousand, 128,000 you've done since then, it was 0 in April and has slowly increased since then, including last month to the tune of about $40,000 a month last month in sales.
Yeah, about.
Okay, Akil, is that helpful?
Yeah, it's helpful. So what I'm understanding is, about 35K per month in probably monthly revenue average in the last few months. This is hard to kind of value this company. I think there's just too much kind of macroeconomic changes happening in the next few months. It's hard to predict. If I was to make an offer on this, I think there'd probably be a lot more of an earnout component to this. I don't know if you're looking for kind of an all cash deal, but I think an earnout might make more sense here to kind of see how things play out.
I'm in discussions with earnout deals, and I'm definitely open to that as well. Yep.
Okay.
Akil, try and solidify something, even if you think this might feel offensive. Again, this is a business that's moving all over the place. But Ed's interesting. He's clearly a rational guy. He's not saying COVID didn't hit us at all. We wanted 1,000x multiple. Where if you were going to make some sort of offer that did include earnout, what would it sound like?
So I'm just going to try to think of it like a SaaS. Typically, when we're looking at a SaaS company, we're paying anywhere between, say, 2.5 to 4x of ARR. But those companies that are kind of growing or at least flatline, and it's a SaaS business. With this one, it's a little bit different. I don't think I would pay, let's just call it enterprise value of the valuation. I wouldn't give it 2.5, maybe a 1x to be kind of honest. That maybe that's on the high end. And maybe a little bit more on that on earnout. So what does that kind of look like? 35, let's call it 400K, maybe upfront, and then the rest, a little bit more on an earnout component. So maybe half upfront, half over a year or a couple of years.
So just to be clear, Akil, so that Ed can analyze, what you're saying is the total deal size would be something like 600K, 400K upfront, and 200K earnout? Yeah,
probably half and half. So say call it 600, maybe 300 and 300 is probably what I would value it. Yeah.
So Ed, again, that's 1/4 of last year's revenue, but you've really taken a hit this year, right? Akil, as a partner, this is your guys' shown out at this point. The offer is clear. I'll let you guys go back and forth.
Yeah, well, I mean, the industry multiples are around the 1.7 to 2 times. That's proven by Vistaprint purchases and many others. So 1-time multiple already is a bit low. Considering the situation, I get it as well. But then using these numbers and this year's numbers with the multiple, I mean, that's a tough one because we just came from 2.2. Yeah, I mean, I understand from your point of view. Yes, a risk. We don't know. It's a macro environment. What's going to happen? But at the same time, it's like, well, you know, the discussion I'm having this year is a bit because they're within the industry. This year's figures is very understandable what's going on because it's not just me. It's not just us. Every single big player in the printing industry is suffering, from Vistaprint to Custom Ink to all of them, except maybe on the POD side and so on. But so in a way, yeah, that's no. I mean, I would say no to that. I don't mind the earnout side, but it's just too small for a few more years. It's just not worth it. I mean, I could go do something else tomorrow and earn more. I'm also talking for myself right now as well, you know. Yeah.
Ed, what would you counter with?
No, and I get where you're coming from.
Ed, is it a flat no, or is there something you had in mind that you wanted to counter with?
I mean, I don't mind the earnout part, but obviously, if we're gonna earn out, that means I'm gonna have to put a lot of work over the next few years. I don't mind doing that work, but obviously, you know, there needs to be a return on the end side. I think I don't mind the 300 today because that's, you know, looking at the numbers. Okay, great, but the earnout has to be much higher. My value, I think of it much higher over 2 years' time, especially if you're saying 1 more year, maybe. But I mean, even still, you know, I think that's where the kicker is at. Where yeah, today 300K, yeah, great, but the earnout has to be much higher.
Ed, don't make Akil negotiate with himself. Is there a counter you want to make? He offered 600K. He said, you know, 30% up front, 50% up front, 50% earn out. Is there something concrete you want to counter with, or do you feel like right now you'd rather just hold it and build it?
Well, because I have other conversations with interested buyers, I'd rather just continue those. I mean, what I would counter, I think it'll be way off of what, I mean, I would say 300 and 1 million over X period of time earn out. Now, if Akil wants to chat about that, I'm happy to, but that's, you know, that's 3 times of what his proposed earnout is. So, but that's
Ed, what are you paying? What are you paying yourself right now? How much of the expenses is your salary?
I have to say that on live.
Yes.
Putting me there. It's this year or last year?
Did it drop and increase? I don't know.
This year, I have forfeited my salary for the last few months, so I don't know what I'll end up with this year. If you ask me last year, around 50K.
Got it. Okay, so it's not that much of an impact on your EBITDA. Yeah. So yeah, I mean, your offer 1 million kind of earnout, I think that's probably too heavy for us. I mean, if this was a pure SaaS, I would be on probably on top of it, but in this play, I don't think we can match that. But
all right, Akil, thanks for coming on. I'm going to bring David Hauser back on since he's still hanging out. David, you just kind of watch behind the scenes, just go back and forth. Is it kind of what you expected? I mean, I think Ed is talented as hell, but I also understand where Akil's coming from. The business is like went to zero basically with COVID, and now he's rebuilding it. Is it the right decision?
Yeah, I mean, I think this is where you see the difference between SaaS and product companies, right? Like I've been in both. Grasshopper was a SaaS company, and my current company is a product company, and it's just different, and the valuations are different, and how people think about it. SaaS just de-risk things, right? Like not having to sell something again and again means when COVID happens, it doesn't disappear, right? And it's a different dynamic. So I would hope, like, I'm sure you'll find a buyer for this and you'll move on. Maybe you move on to a very profitable SaaS business with 80% margins. And do the opposite of what I did, which was go from a very high profit margin business to a lower profit one. You can do the opposite.
Yep. David, thanks for jumping back on. So Ed, look, that was good. I don't disagree with really anything you said. It's just a question of a buyer is putting up money today. The business isn't where it was last year. You've got to maybe spend some time sort of rebuilding. You have it sounds like open conversations on the table with other potential buyers via micro acquire. How did you feel about how that went down?
The whole thing.
Yeah.
Yeah. No, amazing. It was really fun, dude. Yeah. At the end of the day, again, it's all about having fun with what you do. Otherwise, what are we in this for, you know? So I had a great time. I thank you for inviting the people that came in. Great feedback. Hey, didn't work out on the deal. It's good. It's good, dude. So again, it was a blast. So
Thanks for coming on, Ed. Appreciate it. Guys, you just finished watching another episode of Deal or Bust. You want to make sure that you do not miss next week. We've got a great show. One of the top subscription box companies from Cratejoy is coming on. They want to do a deal. This one's going to be a fascinating episode. It's sort of a blend between what we just saw with Ed and true subscription, because they have real subscription economics. There's a cost to the box. There's retention. There's CAC. There's churn. It's some of the sort of the same metrics we use in SaaS, but there's the cost of goods sold is a little bit higher because it's a physical box they're sending out. So to make sure you don't miss that episode, go to nathanlatka.com/invite right now. nathanlatka.com/invite. In the meantime, again, Ed, we're all rooting for you. If you guys want to make sure not to miss any of these episodes and you're watching on YouTube, be sure to click subscribe. And lastly, I just want to give a big shout out to everyone that decided to watch on LinkedIn. If you guys are in B2B SaaS and you're watching on LinkedIn and you're thinking about buying companies or valuations, just share or leave a comment on the LinkedIn post saying, Nathan, I love the show, or just some honest feedback, and then say, send me the Excel. And I will send you a massive Excel file of recent micro acquisitions that have happened in B2B SaaS and the valuations those companies got. These were all public, but we had to do a lot of work scraping them from public resources and CEO interviews on my podcast. So do that on LinkedIn, share the episode. We'll keep growing together, guys. Again, I want to thank you. The show started, 11 episodes ago, and we've grown nicely over time. As you guys can see, the first episode was down there like 2,000-3,000 views. We've since grown. We had a $1.2 million offer on August 6th for Price to Spy. The podcaster last week got a $2 million offer, doing 15,000-ish views. So it's really fun building this with all of you guys. I want to say again, Romaine, thanks for tuning in. Ken, appreciate you coming in, saying again, rooting for you. Stupid Boy NYC saying, I'm looking forward to next week. That's one thing I love about doing these live. You get these URL names. Some of them I can't read. Stupid Boy NYC I can handle though. Okay, that's easy. Don't test me though on that. But Stupid Boy NYC I can do. Thanks for coming on, guys. Again, Joe, you guys are providing real-time feedback. He said higher end earnout to mitigate the risk. Again, but everyone rooting for the founders. That's why we do this show. Guys, thank you again for tuning in to Deal or Bust. And I want to thank SlideBean for putting together the great slide designs that you guys saw today. If you are putting together a pitch deck and you want to ramp up your slide game, go to slidebean.com/Latka, and those guys will hook you up. In the meantime, I will see you next Thursday at 1 p.m. Central, and we'll see if the subscription box company can get a deal.